Hello traders, this is another edition of Stray Dog's weekly video, and in this video these are going to be subjects. So let's go to the first subject, and it is usual setups and useful practice if you are in doubt. I will here just clarify some of the setups that we had on Friday. I have received a question that about this setup here. Could it be in real time this here testing the line in send zone, could it be a false breakdown? False breakdown was already here, breaking the larger time frame support zone. It was already covered in the Friday's recap video, but once again this was here the false breakdown attempt when the market started to trade, where there was a chance for the market to go higher and they didn't use it. Poking above, weak market doesn't have the ability to go higher. And this here is the same as here. Poking above, if you took a long here, there was plenty of time to close it on the break even or for a small profit. But market already was 10 minutes before the open a few points above line in the send zone F, and if larger time frames buyers didn't move it higher in the first few hours of the trading, they will not move it higher at 1 p.m. and that is why we had just this, because market was very weak. So when we are trading price action, it doesn't mean that we are trading just patterns. We are reading the sentiment of the market. We are identifying these areas of interest to us, and most importantly, we are trading the path of the least resistance. When we have a big move and when market is, going down like this, and now they're hugging this and going below. This is the path of the least resistance at this time, when they are already below is to the downside. And one small exercise that I have learned from Peter Reznicek from Shadow Trader, watching his videos on Tasty Trade Network a long time ago, and he learned that from Jim Dalton, is in the real time you are fearful or in the doubt, what should you do? You can use the free question exercise which I already shown you, and I will show you this again 2 times for this and for S&P. What is the market doing? You are asking yourself out loud. Market is going down. What is the market trying to do here? They're trying to go inside the range. How good of a job is it doing getting there? Very poor job, because they're hitting this pre-market low for 1 hour and no result is there. Therefore they are going down, and this is a bear flag. Another setup is on the S&P. It's a very usual setup. These lines are representing session breaks. So this is Friday, this is Thursday, this is Wednesday. And this is Thursday, Friday. This is Thursday low. And then market opened. Because this is Central European time, US market's opening at 3:30. So this is the market open. And after the open, they're starting to poke below Thursday low. And of course you should observe that on the various time frames, and look at how it looks now on 15-minute charts. There were only tails here. But when you're observing this and market is poking below Thursday low, and the range of the interest is below, and this is the range here, which we were prepared that market above this range is bullish. There was something in morning notes about that. And now buyers are front running that, pushing the price above Thursday low, and here is your long trade here with the stop below this. And this is the famous spring, or the famous false breakdown, as the David H. Weiss, in his book Trades About to Happen, he has to say about springs: you can make a living by trading springs and uptrust. And once you become attuned to the behavior of the spring or uptrust, your eyes will be open to an action signal that works in all time periods. It's very important, in all time periods. But you have to, you got to have experience for that. And once you get that experience, then you will know what is the real false breakdown, or what could be the real breakdown. You will learn that with the screen time and observing how volatile instrument is, what it will usually do. Now let's go to the DAX and the SPX 240 minute and daily charts. S&P on the 240 minutes. It also had bearish divergences like DAX, but it didn't really produce nothing but the pullbacks, and it is above this range, which is very important. But the DAX was much weaker as usual. DAX is a weaker market than the S&P, and DAX went below its own around 11K, very important zone. When we use this fib, we could see now that it is below 48.2, and then it could test these lower fibs, which are in confluence with our zones around 10,800 and around 10,700. We already have that zones on smaller time frames. What about daily charts? DAX on daily chart closed below 50 and below this important zone for him, and S&P is looking much stronger. But just note that all of the indices, S&P, DAX, Nasdaq, this is Russell, all of them have something in common. They are all between 50 and 200, and that position between 50 and 200 on daily, that can last for some time. We shall see, are there going to be some decisive moves above or below these main moving averages. And DAX as a weaker market, we can use, and we are using, correlation with the S&P, but that correlation really doesn't work 100% of the time. This is the S&P index chart in which with added DAX index on it. So DAX is this blue line. And observe this period. This period is when quantitative easing was announced in Europe on starting from January 2015. And this was a huge move here when DAX clearly outperformed the S&P. But it retraced all of it, and S&P was chopping around here. And from this point to this point, if you were holding, longs as a long term holder, like Warren Buffett style, then you would be on break even on both of those indices. And this period here was really challenging for you if you were a trader that after trading DAX you would trade S&P, because S&P was going from May to October last year to the upside all the time, while DAX was going lower. So they are not correlating like 100% of the time exactly. And we should know when and to use those kind of correlations. We are going to use when they are correlating. Now DAX is again weaker, and we must look at the these main support and resistance areas on each own, but with one eye to observe what are the Americans doing on their market, which is stronger than DAX. And again, let's turn the indicators, remove this DAX, and go to the cash charts for one also good thing to keep in mind. Those are the gaps on the cash charts that are very important. And also you can use cash index chart, which is the index is the mother of the derivatives, and index is only regular trading hours. So there are no pre-market and after hours on the index, and thus it is good for observing gaps and for also gauging the market strength on a move. Because when you have a move like this, strong up move, gap up, value is going higher, runaway value. That means usually the next day is going to be at the same direction. At least one day. So for us, day traders and swing traders, that can be very important. Like this. Gapping down below former support. What that could mean? Is it really going to be a false breakdown here? No. It is going to be continuation move, most likely. And like this was the December move. Gap down, gap down, gap down. That moves the price will continue, most likely continue to go the same way. This was here the famous 4-month trading range, but it was a good trading range of 600-point range. Once they made this kind of move above, with such a huge gap up, that was initiating a larger move to the upside. And when this happened, in this time here, this only one day, then you know that at least a few days are going to be to the upside. And that was where not a few days, it was months and months to the upside. So this is another thing, how can you use cash charts. And about next week, earnings are still on, but both in US and in Germany, market movers already announced that earnings. News, most important news will be on Tuesday, when we will have Bundesbank president speaking and also Fed Chair Powell in the afternoon, which will be more important. And on Thursday we will have a German preliminary GDP quarterly and US retail sales. So on other days nothing much. So not a week full of news. Market we will be concentrating on the US-China talks and so on. Let's go back again to observe these supports and resistance that are really matters. So as said before in the morning notes in these previous days, this is the main thing on the S&P, this range here. Staying above that, staying above FOMC day. This is the range on the daily chart. This is the range, the same range on the 240-minute chart. So staying above this opens door to another test. If they are going to test again this 200 moving average, they are probably going higher, and there then they will have this resistance here as the next target above. Going inside, could just chop around here and slowly grind to the upside, and decisive move below 2625 level approximately. Decisive breakdown could open door to more movement to the downside and filling this area here. So that is something to keep in mind. Also, about correlation, I said that DAX is much weaker than the S&P, and that is also very much clear if we are going to observe DAX on the weekly chart. Let's go to the chart that doesn't have so many lines, like this futures chart. This is a futures chart of DAX weekly, and we can observe that the trend line from the September 2011, this trend is broken to the downside and back tested. This is 200 weekly, price is below it, below the trend line also. This is not bullish at all. But a completely different picture is on the ES. Let's compare apples with apples, so futures with futures. This is S&P, which had a clear bounce from the 200 weekly and trading above it, not below it. This is its own trend line from 2011, this is from 2009. So this is looking much more bullish than the DAX, meaning that if S&P is going, if this is going to be a very reversal and S&P is going to attack, the all-time high, that means it could probably drag DAX with it. And for DAX, this is very important for DAX. This here, is it going to go, let's say, next week above 11K again or not? Because if it is going up, then on this time frame, 240 minute daily, this move could be just a false breakdown. So those are the scenarios that we should, take note of. And for the end of this video, I would like to just announce for the next week on my site, they are going to be in the examples part here. So this is my site for the ones that don't know that, trading.com, and on the examples tab there's going to be some new examples from February. So here is the page that you can look for yourself how you can apply this trading with predetermined support and resistance zones with contacts from the morning notes. And this is some of the examples. This before chart, and you can also do like this for the full screen. This before chart with morning notes is something that I publish before the open, and this after chart will be usually 5-minute chart to zoom on the opportunities on the day time frame. So on blog also I will announce one interesting blog that will be here, and it will be called From Trading Idea to Profit. That is going to be for the next week. And that is it for this edition of Tradox Weekly video. I wish you a good weekend and good trading.